What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Nvidia stock, ticker symbol NVDA, on a variety of time frames in anticipation of the next trading day, Monday, April 22nd. Okay, guys, on Friday, Nvidia finished down $84.71 a share in regular trading hours. That is minus 10%. Listen, it faded a couple of bucks extra. I mean, at this point, what does it matter, right? In the after hours. But as always, after hours, we have to take what little movement compared to the day occurred in the after hours on Friday with a grain of salt, because volume is always going to be incredibly low. Okay, but of course, the majority of the move taking place during the session. Now, listen, in case you don't know, in case you're kind of wondering, like, what in the world happened on Friday, Supermicro Computer, of course, a major player in the space, they decided not to pre-announce their earnings. Now, they did so previously, and on the street, I suppose retail as well, if a company pulls that, where they pre-announce earnings and then the next quarter or a couple quarters to follow, they decide not to do so, that's going to shake a lot of people out. Supermicro Computer was down 23%. 23% on Friday. That hit the chip space relatively hard. I mean, AMD, another favorite company of mine, down about 5.5% on Friday. You know, Supermicro, again, 23 to the downside. And Taiwan Semiconductor, down 3.5% approximately on Friday. Now, typically, guys, a company will pre-announce earnings if they think that their earnings, or I guess they know that their earnings, are going to drastically be better, I suppose, to put it, simply, than the Wall Street consensus. So, them not doing so, I suppose, is worrying investors. And you guys know how it is. When that momentum builds, it really, really builds. Okay? But on a stock like Nvidia, sure, it's down 10% on the day. But what I tend to see happen, and this is such a cycle, it just happens over and over and over again. Everybody seems to flock to a certain couple of stocks, due usually to the aggressive upside nature of the company, or the company's growing exponentially, like we've seen Nvidia do so with their earnings reports as of late. And then you get, a big green day, and everyone's like, yeah, this is what this stock does. And when you get a big red day, everyone looks around at each other like, well, what in the world just happened? You wanted volatility. This is what comes with volatility. Okay, and you have to be prepared for that. But understand that it goes both ways. It's not just necessarily to the downside. It just happens that the downside tends to snowball more quickly because fear is one of the only things more powerful than greed, or at least it can be. Like the old saying, stairs up, elevator down, right? In this case, it's kind of like elevator up, out the window, down, right? But listen, it's one day here, and I'm very curious to see how we end up here coming into Monday, Tuesday, and Wednesday. So let's take a look at this thing. And although to many people, they're going to look at the day with a bad taste in their mouth, and it's down 10%, and they're not going to want to look any deeper because it hurts, right? It's painful if you're long and you have a day like this. But I think it's important to just face this, especially, of course, bulls. Bears, you're loving it right now. And let's try to pull out as much bias that isn't as obvious simply by looking at the price action. I know a lot of you are like, what are you talking about? It's down 10%. But the truth is there's a lot of bias to be had when we peel back the onion, right? When we start looking under the hood. So let's see if we can pull any out, just quickly starting with a volume profile analysis here on the 5-minute chart. Now, of course, it was a 10% day to the downside. So typically when you have a move like this, whether it's to the upside or the downside, it's going to be more of a sustained move. So rather than circling the ones that I want to look at, I kind of just want to look at all of these moves together and see if anything sticks out. And let's do this together here. So you can see we got a very contextual open, actually. There's really not a lot to be had until about 10 a.m. Eastern time. My charts are Central time. Then, of course, this downside move that kind of initiated this, right? We start to see this pull downside away from those EMAs, extending a little bit downside, signaling a little bit of fear is pouring in. We start to see a small amount of bearish bias, right? A few consecutive red bars with a little bit higher than what is normally contextual volume. Okay, and then that fades as the stock recovers. and then consolidates, right? That's some bearish bias. We start to see this pull downside. We start to see a small amount of bearish bias again. But you guys have to understand, this isn't 1.5 million shares per 5-minute bar for 6 consecutive red bars. This isn't like anything out of, at least up until like noon Central Time, right? 1 p.m. in New York. This isn't like tremendous bearish bias in the volume profile that I think a lot of people would expect, at least up until midday. Of course, we haven't looked at the afternoon yet, which is why I think that this is worth looking at, because assumptions can be dangerous. And like in the first half of the day, we're seeing a little bit. It's not really tremendous, okay? But if we look at the actual chart, probably about, if we zoom out a little bit more here, probably about maybe 2/5 of the move happened before lunch. And then we got a bit more, of course, happening after that lunch hour. So if we look here, when the volume really starts to pick up, after we start to see this big fade, it kind of started with this bar. We got that sustained sell into the close on much higher volume than what is normal, okay? But if you look here, we're seeing a bit of a mix. It's not like, for those of you who maybe look at or watch videos from the main Roensch Capital channel, and you've seen some of the trading trainings as of late, or those of you who are in the private server, getting like the in-play stock alerts, and we're talking about how I'm trading those every day, there's a lot of volume analysis that goes on. And what's really obvious about like a breathe-in ghost setup that I'll trade on an in-play stock is you'll see this increasing volume, okay? Usually, if we're taking a trade to the long side, or if I'm doing so, you'll see that occur on green volume, and then you'll see volume tank off as the stock pulls into a moving average on the red bars. So you have big volume on the green bars, really, really small volume on the red bars, comparatively speaking, okay? And then what I'm typically doing is I'm looking to enter off of a psychological level, because we're getting a huge amount of confidence on the push upside, a very small amount of confidence, or at least bets being placed, on the break back downside on the retest. And then I'm looking to enter as close to a psychological level as possible, looking for that quick FOMO push on higher volume back to the upside, okay? Because we're dealing with a lot of, in that case, and in case of an in-play stock, a lot of human traders, which psychology takes a front seat in that case. It does in any case, right? But especially in a case like that. Now, why am I talking about this? Because it goes both ways. You can see a similar thing on downside moves where you get tremendous volume on red bars, and then as the stock consolidates or bounces, volume tanks off a lot. But if you look here, we're seeing elevated volume. And listen, if we look at this as a whole, of course, there is, in terms of the volume profile analysis alone, obviously with the price action, right? We're peeling back a layer and looking simply at the volume profile to see, does it support price action right now? There's clearly a bit of bearish bias just due to the fact that, we're seeing quite a few more red bars that are out of context in terms of volume than green bars. However, going back to the high volume and then quick dump off in volume, like that breathe and go comparison, we're not seeing that. We're not seeing tremendous volume to the red side, and then as some green bars pour in, we're seeing volume just tank. It's not that clear. It's not that obvious. We're seeing volume kind of pick up for a few bars and then tank off, and it doesn't matter if it's red or green, volume just tanks. Okay, we're seeing volume pick up, however, we're mixing in some green bars now, and then it tanks off on red volume. Picks up on green volume, tanks off, then heading into red volume, and then picks up on red volume into the close. My point being, it's not as clear as I would have expected this to be on a minus 10% day where it lost almost 85 points in a day. And if I had to speculate, I would say I think the reason it's not as clear is because you have more people and more algorithms than maybe you might on business-specific really bad news, taking bets against the speculative downside nature of the move that we saw. Now, of course, do I love that Supermicro didn't pre-announce earnings? No, because if I'm an executive there, if we have blowout earnings, I'm probably going to pre-announce them to pump the stock. Them deciding not to, I think, is worrying a lot of people, a lot of institutions, okay? So, I'm not in love with the news, but I think it's necessary to consider the fact that when a stock like Supermicro can be down 23% in one day, it becomes pretty obvious that quite a bit of the money in that name, especially when you look at the movement as of late, is speculative in nature. I think we can all agree on that. So a downside day of that size in a stock like Supermicro comes a little easier than in a stock like Nvidia. However, the Nvidia move Friday, is based off a mix of both the news coming from Supermicro and the movement in the stock. It's feeding off of that. However, I have to again argue that the movement in Supermicro is, at least in part, snowballing so quickly because of the volatility attracting more speculative dollars, and speculative dollars get spooked really easily. They're emotional. Okay, listen, Friday was an emotional day for everyone in the chip space, really. But when I look at the volume profile here, to me, it just looks, it's not what I would expect from a day where we had, for example, just to make it really clear, business-specific horrible news where everyone can agree, okay, this is a sell right now. Am I willing to hold out? Okay, and then what you get is you get a lot of the volume pouring in from people that just are saying, no, I'm not willing to hold out, I'm selling right now. And it ends up being a really, really powerful bearish bias in the profile. But you're getting a lot of contrarian bets being placed, more so than I might expect on a day like this. Which leads me personally to believe that I think a lot of this movement was simply emotional and fear-based. And listen, it's speculative in nature. They're saying, why didn't they do that? Why didn't they pre-announce? This is why we have to pay attention here, because if we don't, we would assume, I think many of us, okay, that the volume just would look different than it actually does. All right, so, we have to consider all these things. It helps us gain more insight into the actual move, I think. So let's take a look here at the 30-minute. I want to look at psychological and I think we'll kind of breeze through this here today. Self-fulfilling prophecy levels. Listen, we pulled away downside hard on the 30-minute, but the 30-minute, especially the 50 period on the 30-minute, that white line is very quick. It's 8% to the upside away currently. However, I expect that this is going to crash downside hard. Crash is probably the wrong word. The 50 period is going to aggressively likely move downside hard on Monday, making for a smaller necessary upside move to reclaim that. So, bears, you guys want this thing getting downside through 800, and if we see a retest of it, you just want to see it reject hard on high volume to act as a descending area of temporary resistance, whereas bulls, a reclaim of that 50 period, getting it to flatten out and trend back into an ascending position is really the goal. We'll see how this plays out on Monday. But if that were to occur on Monday, for me on the 30-minute, from a bullish perspective, that would be like best case scenario. Whereas if I'm positioned short, I want this 50 period getting down hard, down through 800, down through any psychological round number that I can possibly get. And if we see a test, rejecting hard, getting a hard downside aggressive trend out of that 50 period and have it being respected as a psychological resistance. That's all you can ask for, really, as a bear out of the 30-minute. Now, let's take a quick look at the 4-hour here. Listen, guys, I'm not going to waste too much time here. You can see, when we're looking at the 4-hour, the only thing that's specific to the 4-hour, really, in most cases, is the 50 and the 200 period moving averages, or are the 50 and 200 period moving averages. And the reason is they're heavily respected, especially on a stock like Nvidia, because this is such a common chart. Everybody is watching this, okay? At least most people are watching this. And the truth is, though, it's slower moving, right? You can see this is just barely starting to curl to the downside, and the stock right now, based on the after-hours price, we'll just go with that, is 13.7% away. So I'm paying attention to it, but only when it comes back in play, okay? So, the daily. Listen, guys, the daily chart, just by nature, it's going to have the most amount of eyeballs. There's the most amount of people watching this specific chart with the 200-day moving average, that gray line, and the 50-day moving average. There's a reason I keep my charts for analysis of this style so stupid simple. I don't want anything else. I don't need anything else. There is no secret indicator. There is no indicator that can tell me what's going to occur. My view on the market and on TA, and again, this is coming from a guy, I make these videos, basically technical analysis videos, every single day. So don't get me wrong, I believe in TA. I've spent countless hours of my life, over 12,000 hours. I calculated it recently for a video on the main channel, studying charts. And my strong belief is that TA is nothing more, nothing less than a self-fulfilling prophecy. It's just psychology. Okay, so while all indicators lag, right, they're just reading the data and presenting something to you. I want ones that track something that's real, like volume, okay, or the average prices. Basically, that ends up being popular moving averages, volume-weighted average price, the actual volume itself, things like that, right? Implied volatility here, down here, by the way, is different. It's very real. It's coming from the traders in the chain. But it can't only be that. It also has to check my other box, which is it's very heavily watched. Because I only care if other people, institutions, and algorithms care. Right? They work because people believe they work and make decisions based off of them. That's it. Nothing more, nothing less. But the truth is, I would not want it any other way. That is incredibly powerful. And the daily chart gives us just that. Like, for example, if we're looking at the 50-day moving average on the daily chart, so is everybody else. Right? And listen, I'm going to go out there and say, part of Friday's move was that we cracked hard beneath the 50-day moving average, and if we zoom out, that's the first time we've been beneath it since, I suppose, November 3rd, 2023. That's a pretty big deal. That can certainly add to the momentum, the snowball. Now listen, this is the daily chart. It's not going to show after hours, but that's okay. Come Monday, guys, here's what I'm watching. All right. It's not uncommon to see quite a bit of volatility the day after a move like this. So 750 is not only sort of a psychological level, but it's also a really, really obvious technical level that we've had drawn here for a while. I'm watching 750 very closely. The other area that I'm watching is 800. Okay, we can toss in 700 as well, just as on watch, just so that people are aware of it if it were to come into play. Here's what I'm really looking at though. Step one, bulls. If we test 750, I do not want to give that up. Okay, I want to hold that on a high volume bounce. All right, listen, I don't mind what volume we test it on as long as we see higher than average volume on a bounce away. Bulls, ideally, it's about 5% away right now, but a break and hold back above 800 is like a great scenario for bulls come Monday. I know we don't reclaim everything, right? But that would be a beautiful day. Asking for anything more than that, I think that's a little bit greedy. Take what we can get, but a break and hold of 800 is beautiful because it's a really, really important psychological level. Not only that, but it puts distance between us and 750. Okay, now bears. You guys want to see ideally two things, but really you want to see at least one thing occur. A hard, high volume, downside break of $750 a share. That would be a great scenario for you bears come Monday. And by the way, I don't mean a break and hold for like 6 minutes. Okay, I mean a downside break hard on big volume as early in the trading session as possible and holding beneath there for basically the entire day. If you see a retest of it, rejecting off 750, reclaiming that as resistance intraday. Okay? And similar to the bullish side of things, bears, if you guys could crack below 700, that's like best case scenario for you guys, come Monday, because that's another psychological level that you're cracking downside, not only 750, but also 7. Now listen, implied volatility, it spiked, okay? It spiked on Friday. So what does that tell us? Well, if you compare this now, previously it's been very low. But if you compare IV now to the last couple of months, we're in about the mid-range. Some might argue the mid to high range. So if you experience some IV pump, and this here is part of the reason why put owners likely made so much money on Friday is because if you buy puts when IV's low and then IV pumps and you're right in the delta, you're correct in the directional movement, this just adds to the money you make. Okay, now bulls, if you owned calls on Friday, right? Believe it or not, this IV pump is likely the reason why you didn't lose as much money as you thought you might have. Now that's going to sound bizarre, but if you purchased calls, this IV pump can benefit you even when you're losing money. It can add some padding to the loss. Now I'm sure you're down, okay, because of the delta move, but that can pad it, okay, which is why it's so important. So crucial. Seriously, I say this all the time, but it's that important to really, really understand not only all the Greeks, but especially Vega, right? Implied volatility, IV. Now, let's take a look at expected move. This is going to be a little bit weird here after Friday, but let's take a look. The next expiration we have here on Nvidia is April 26th at the close, and the expected move between Friday's closing price and next Friday's closing price is plus or minus $56.75 per share. Now, we always have to consider, like, when are earnings? Okay, well, earnings are not coming up until mid to late May. Okay, so there's no earnings, of course, next week. So we can reasonably take that number and divide it by 5 trading days. Okay, that gives us $11.35 plus or minus expectation on Monday, just Monday alone. But remember, I like to add about 50% to that, at least in this market. That'll change. And the reason I do that is because that first dollar amount, that first expected move calculation, assumes 5 red days in a row or 5 green days in a row. So I like to add about 50% in this market. And that gives us about plus or minus $17 a share on Monday, okay, compared to Friday's closing price. But I will say one thing, because this is a little different than normal. You have to understand that with a giant sample size like the options traders, and by the way, guys, expected move by its very design, it's a technical term, by its very design, is not going to have a directional bias. It's a volatility expectation being pulled from the implied volatility on each expiration. So we do the entire analysis to try to develop some kind of directional bias for ourselves. We then look at the volatility bias, and then we can also look at the directional bias out of those very traders, which we'll do here in a second. But we have to look at that expected move and at least consider that since we're doing a little bit of guesswork because we don't have daily expirations on Nvidia, so we're doing like the divide by 5 trading days, add back about 50% to make up for the streak assumption out of the first number. You have to understand that those options traders are typically going to expect volatility throughout the week to die down from like Friday. So I think reasonably you could expect that maybe you would need to add back a little bit more than 50% to calculate for Monday, because, you know, we can have a reasonable expectation of a lot of times you're going to see some more volatility the day after a big day like Friday than you would like 4 days after the fact. Okay, you understand what I'm saying? Like, that's a very reasonable expectation, but I'll let you kind of think about that. So once we add back about 50%, again, the expected move compared to Friday's closing price to Monday's closing price being priced in by the market is, with some guesswork, approximately plus or minus $17 a share. Now listen, last thing to do here. The bias, the directional bias, coming in from the options traders on Friday, and let me warn you, this is very, very high volume for Nvidia. Of course, that's expected. We had 3.39 million total contracts traded. That's a lot for Nvidia. Okay. Of that, just Friday, 1.83 million of those were calls, 1.56 million were puts. So, I mean, believe it or not, we're actually still seeing a call side bias out of the options traders with a big sample size, okay, from Friday on the overall ratio. But what's really interesting here is that, like we do every day, by the way, listen, if you haven't done so already, please subscribe to the channel. Helps out tremendously. My goal here is to hit 7K. And Nvidia is a daily upload, so I'll keep the Nvidia videos coming. But like we do every day, if we break this down by the short-term speculators, those gambly, far out of the money contracts, the 0 to 20 delta range with, by, you know, on average, are going to have the shortest expiration. Out of those alone, we have 926,000 calls and 569,000 puts. So not only do we have a slight call side bias in the overall ratio, but once we start breaking it down by the short-term speculators, we start to see that call bias increase rather heavily, okay, which tells me that the options traders who are trading the shorter term, on average, far out of the money calls and puts are, on average, more commonly placing bets on a short-term bounce than they are a continuation dump. Now, look, this is one factor of many, okay? I know that confirmation bias feels really good, but remember what this is. This is one factor of many, okay? And the options traders, they can be wrong, but that's what the market is telling us. That's what the traders are actually doing on Friday. This is real data, okay? Listen, guys, if you want to get those in-play stock alerts, these are stocks that usually have a fresh catalyst. These are stocks that are moving, popping up on scanners all over the world, attracting mostly human traders, which by nature are emotional and therefore rather beatable. I'm alerting these in-play stocks to my private group every single trading day. If you guys would like to get those alerts, that link in the pinned comment, that'll let you get grandfathered in at the current price. The price goes up over time, but whatever price you join at will make you immune to future price raises. There are 4 membership tiers. Of course, you can take a look. They all offer different perks, different benefits. Platinum, for example, is my smaller one-on-one group. But all 4 membership tiers, they all get access to the in-play alerts. Hope to see you join. Listen, if you're getting value out of the Nvidia videos, guys, I know that this one was a little bit longer, but we had a lot to talk about as we head into Monday here. Please leave a like on the video. Again, it helps out massively, tremendously. You have no idea. I appreciate it, and I'll see you in the next one.